Hello, this is Wes Bridle. This is another Kingdom Calling Economic Update video. These videos are all short snippets of what's going on in the economy and in the world to follow up on the video we made almost 2 years ago that gives you the big picture of what's going on in the economy going forward. We call that message the coming storm. You can watch that for free on the link right near this video, and it's very important. If you're already on our newsletter list, which you get when you also click onto that, you got our update earlier this week where we talked about the fact that a lot of the really hard times that we talked about were coming 2 years ago are upon us now. And so we've seen that as I'm filming this, the market's down over 3%, just a huge down day, the second huge one this week. So anyways, I'm going to jump into it. I'm going to make several videos here today, and you'll see them over the coming days. The first two are just going to be on what's going on in the U.S. economy. State and local government pensions. This is, again, something we've been talking about for some time. The pensions are not funded properly. So they've made a lot of promises to people about future payments that they're going to make, but they don't have the actual money to make those payments. And so now it's starting to, the rubber's hitting the road, and big problems are coming. There's a Northwestern University study that showed taxes need to be increased $1,400 per year per family for the next 30 years. So increased taxes $1,400 this year, $2,800 next year, what's that, $4,200 the following year. Massive tax increases in order to properly fund state and local government pensions. There's no way that's going to happen, of course. The Postal Service is broke. They're shorting paying their pensions in order to sort of make ends meet. They've been borrowing money at super cheap rates from the U.S. government for a long time now, and they're totally broke. The unions have infested the post office, and they're just totally inefficient. Central Falls, Rhode Island city government employees get the choice. A judge looked at their pension situation and told them they can accept a reduction of up to half of the pension benefits they think they're going to get, or risk losing everything in bankruptcy court. So that's unfortunately, the difficult situation a lot of people are depending on pensions are going to be looking at. St. Louis Federal Reserve President Bullard, he's one of the few that will actually talk about some of the risks and dangers that we have. He said, talking about low interest rates, the extended long-term low interest rate environment that we have, he said when it does blow up, it will be too late. When markets lose confidence in the U.S., rates will skyrocket and the crisis will be here. Again, we've been saying this stuff for a couple of years now, but it's good to see the Federal Reserve, some of the Federal Reserve presidents agreeing with us. The problem is, of course, most of them still don't. The ones with all the power still don't. They're still pushing on. We'll see, it won't be called this, but we'll see QE3 here before we know it. St. Louis Fed VP Neely said that the US dollar only dropped half as much as expected due to the QE2 that we just finished up. This means that that was kind of an appalling statement to me. They were expecting the US dollar to drop apparently 14%, because the US dollar dropped 7% during this time. That means they were shooting for the US dollar to drop to an all-time low. That's kind of a scary thing, because when you start flirting with all-time lows, you start flirting with waterfall type situations. The market just doesn't know what to think at that point and could sell off harshly. They were expecting the dollar to drop off, and we've been talking about this. They want the dollar to drop. They want to be able to somehow afford all these promises and debts that they've collected. The only way that could possibly happen is through inflation, that the dollar drops and there's a lot more money, and that's how the debts in the future are paid for. U.S. stocks rose 26% during QE2, and the U.S. dollar fell 7%. So it gives you an idea. It's going to be interesting to see what happens when the next round comes. I think the dollar will fall a lot more dramatically next time, because the world is absolutely fed up with what the U.S. is doing. It's going to be interesting to see what stocks do. Will they take off the same way, or if things are getting really ugly out there, people might pull money out of the stock market just because they need it to live on, and they're scared, and therefore we see a plummet. Before, I would agree that eventually, if the dollar's really getting destroyed, the stock values will go much higher nominally. But my personal opinion is we'll see a much lower point in there because people are scared and they need what money they can get. Let's see, the U.S. opens strategic reserve of oil. This is a little bit old news at this point, but this is just bizarre government thinking. To think that 30 million barrels of oil, to think that that was a good idea. The only time that the United States government has gotten into the strategic reserve oil before, it was an actual emergency. This time we did it because, well, when it was first talked about, it was said because of speculators, which is ridiculous. We talked about that in a previous video, that there's abundant proof that speculators actually help the market and don't drive up prices. But actually, when they talk about Libya, they can't get their facts straight. Depending on what is right for the message, that's the rationale they use. The reality is all we did was tick off the Middle East and OPEC. So the price of oil was at 95, it dropped to 90, it was immediately back over 95, so it had zero beneficial effect. Now I think we're around 90, maybe below as I make this video. But it had no beneficial effect other than to tick off people that we are in business with, which is only bad for us in the long run. So that's basic economics, that the immediate short-term effect is never as important as the ripple effects, the unintended consequences that go on and on and on afterwards. It's a really stupid move, but that's what we're doing these days. Money market exposure to Europe, I talked about in the last set of videos. This is exposing some interesting problems. If you remember 3 years ago when we had the crash in this country, a lot of the problems were based on the fact that money markets, or what is considered to be safe haven money for people, were invested in things like funky AAA mortgage bonds, which really weren't AAA at all. And we have the similar thing going on with money markets in the US reaching for European sovereign debt, which again carries its AAA rating, but is actually much more dangerous. And the reason for all these problems is because of the extended low interest rate environment that we're in, where the money managers need to reach for yield. They're trying to get any kind of yield they can so that their clients feel like they're getting something. It's making them extend and choose a lot more risky assets than they would ordinarily do. That's the problem when you manipulate interest rates down so low. It causes the whole system to want to get riskier and riskier, and it causes an implosion, as we're starting to see. Let's see, so we've got deflation in housing and now stocks. We're seeing that clearly. So a lot of people think that, okay, we're going to just have this horribly deflationary period. The US dollar is just going to go stronger and stronger and stronger. To some degree, we'll see a little of that. But if you look slightly longer term, and I'm not talking about our kids, I'm talking about our lifetime, our pretty immediate future. Have you ever heard of a country whose currency gets stronger and stronger when they're struggling with massive amounts of debt? Printing money like it's going out of style. Those two things don't go together well. So the outcome is really clear. The steps to get there are a little muddy. I'm going to cut it there and jump into a next video here in a minute. Again, if you haven't seen the coming storm video, I highly recommend you do it. These things are unfolding before our eyes. You'll notice a lot of the predictions in there were dead on, but the really big things haven't quite begun yet. So there's still time for you to prepare. Again, if you'd like to, drop us a line. We'd love to talk to you. Thank you, and God bless you.